Hello there, my friends. Once again, it is Deuce FX Machina. We're going to go through another strategy, another very simple strategy, almost back to the drawing board as far as some traders come in to learn, but ultimately do not see how to utilize this strategy to their advantage using asymmetrical compounding, which is 1 to 2. And your main concern is going to be your MACD basic default settings, which is going to be your 12, 26, and 9 EMAs. And I keep the crossings on the histogram as well. And you're going to want to load up your sessions as always, because time theory is definitely critical to all of this. If you do not trade at the right time and in the right place, you will not win a trade. You have to do this. Also, our confirmation indicator is going to be our EMA 20 and 200. Very simple strategy that is by itself, but combined with the MACD is very effective. And the last piece of the puzzle we're going to use is going to be our Heikin-Ashi candles. Heikin-Ashi is always going to give you a better viewpoint in how price is moving in comparison to your traditional Japanese candles. Japanese candles are very useful as far as seeing order blocks and areas of liquidity being dried up relatively fast, but your Heikin-Ashi will give you a better view of the momentum. Like this morning, we have entered a trade on the New York Open, so we saw a Heikin-Ashi candle close. We saw our crossover on the MACD, and we saw our histogram go into bearish move and cross below our 20 moving average, and is now slowly breaking our 200 moving average and hopefully moving to our target of 1 to 2. Because it is under our 200 moving average. And this is just on the 15-minute chart. So ideally, I do like to trade on the 15-minute. Also really love the 30-minute as well, 15, and the 5 if you're really feeling risky, but I don't recommend it just because 15 minutes is kind of a good medium ground for finding trades. 30-minute is, you get a little bit of a higher success rate, but you might need to lower your risk reward maybe by a tad bit, maybe 1 to 1.5 or 1.75, just because the trade can take an overextend and move back into loss. So, like here for example, this was on March the 2nd. We are coming into our London Open session. So primarily, I don't want to take and trade before hour 23 on New York Eastern Standard Time trading. I really want to kind of give myself this Asian gap. The Asian gap is always going to be important for you to really kind of watch. Because if you get into the middle of the gap and you think, oh well, this crossed the 20 EMA, this turned, bearish, this is going to be moving down. Well, psych, because you're going to look right here, and obviously you can see that price is going to easily reverse for the next few hours. So ideally, the 23 and up is going to be where you're going to want to look for trades. So right here, I mean, you could have grabbed, let's see, we got a break of the 20 EMA, so that's our first signal confirmation right there. And then you had a crossing of the MACD. You set your stop loss to the top of the prior high, and then you do your 1 to 2, your asymmetrical risk reward ratio. Bam, you just won that trade. And then what do you know? Once again, London ended up becoming very bullish on this scenario. So you got in once it crossed over the 20 MA. You set your stop loss below the prior low, and you targeted 1 to 2. You do not want to trail unless this is either a closing day. Like if it's on Friday, I definitely would trail my stop just because the banks definitely are able to manipulate prices and you can end up losing your whole account if you're not careful with how you play your cards that way. So, but obviously you can see that's a pretty easy trade. Here goes another example. March the 1st. We're just going day by day by day right now. So, we're in the 3 o'clock Eastern Standard Time era. When London opens up, we are going to take a short position. We are going to set our stop loss at prior high, and we're going to target 1 to 2. Easy. Or you could even target the moving average. I mean, and it just so happened to perfectly line up with the 200 EMA, which is, just a beautiful thing. So there we go. We'll just leave that alone. If we got into that trade, I would just say that's it for the day. So, and here we go again. Once again, we come in, we're above our 23-hour mark, and 23-hour mark is usually when most institutional traders start to consider market moves because of volume-weighted average prices. I know that this is not using VWAP, but the 200 and the 20 moving average are pretty considerable when it comes to getting an average buy or sell price. So we get in at 23.15. We're going to wait for our break of the 20 MA. Oh, sorry about that. Let's see. Long position. We're going to get in long right here. I'm going to set our prior low right there, and we're going to target 1 to 2. And obviously, I know it looks that, you could probably target a lot higher, but that's just based off of your risk assessment, and everyone is different. But the highest win rate is probably going to be anywhere between 1 to 2 and 1 to 3 whenever you're utilizing NASDAQ or VIX, GBP, JPY, XAU, USD, DXY, or even crypto. You'll end up winning most of the time. You're not really going to have to worry about whether this is going to, pull back and you're going to hit your stop loss. So, pretty self-explanatory. And as always, keep in mind the news. I know there's a lot of things going on in Ukraine, and I hope that Ukraine gets through this. And I really wish our brothers and sisters the best of luck. And I hope that they take back their land. They're able to get back their sovereignty. So we'll see what happens though. But you guys stay safe out there, and I appreciate it, and happy trading.